All right, we've got a great community discussion going on here. I will just give it a couple minutes and give you guys kind of an intro. Welcome to the Independent Investor Channel live stream. For you guys that'll catch this later or are new to the channel, this is something that I offer every Friday evening at 9 o'clock Eastern Time. It's great to have my channel creators in here. We're going to be talking about a ton of stuff tonight. And I just want everybody to kind of think a little bit, about what the live stream, what the community means to you. I tell you, this is something that I really look forward to. It helps me just as much as it helps you guys. The investing landscape has evolved so much since I've been investing over the last 20 years. I remember looking forward to my appointments with my financial planners. Because I didn't know any better. And it was always just so intriguing, even though I got about an hour with them once a year. And it's just interesting how we justify, going and maybe getting a personal trainer, helping with our physical fitness, or if we've got a car issue that we take it in and we get that maintenance, we pay money to do so, to keep our depreciating asset maintained and in good order. And I think for a lot of people, an investing community like this, whether you enjoy the content through YouTube or you enjoy the content through Facebook, I just had my good friend Bob in the group here, giving some kudos and thanks for, sharing some of the family photos. I really like that. I get kind of sick and tired of the polished media landscape. It's seemingly so polished, it's almost fake. And, I would ask you guys, if there's nothing else, to sit across and acknowledge that I'm just a working class fella, don't come from money. I like to try to provide that relatability for you guys. So you can kind of make this understandable for you, and you kind of accept what it is that you can get out of investing if there's something there for you. I do contend that I do believe everyone should invest, but I don't believe investing is for everyone. What I mean by that is, if you get excited about investing only to jump in either ill-informed or overexcited, and you're inevitably doomed to fail, you probably shouldn't be one of those folks that invest. You should have been one of those folks that took a little bit more time. The stock market's not going anywhere. Right now, I think we're being given a real opportunity for pause. Some really good comments that I'm going to get to here in the community discussion about how to handle this market. And the stock market, if I can sum it up for you guys, in my experience, I'm somewhat dull and a little bit numb to the love and hate relationship that a lot of people will have when they start investing in the stock market, both of which are emotion, and both of which, here's how it typically plays out. You typically love the stock market until you don't have an excuse to love it anymore, and then you hate it. Okay. What I would say is to try to take a little bit more diplomatic approach to the stock market, always understanding I'm going to be working through really the basis of rhetorical questions that you could be asking yourself to help you validate why it is that you invest, where you invest, how you invest, and go through those checks and balances. Because if you can answer these 6 questions back here for yourself, then you can actually turn that information over to somebody else who may be struggling and asking these same questions. Because like you go get the car maintenance, and like you go get the fitness counselor, if that's your thing, maybe you go see a shrink to get your mind right, I guess, all important things, right? You go and you seek out a yoga instructor, all important things. I think finances all too often take a back seat. They really do. And we typically default to either putting investing on the shelf and not doing it at all, or we end up defaulting to the perceived expertise from a money manager. And what I would challenge each and every one of you guys to realize about the financial landscape, when you look at it and if you're a new investor, it's very overwhelming for a lot of reasons, okay? But make no mistake, the independent investor channel is about investing, okay? And in some form or fashion, I'm going to leave bonds out of this statement, but in some form or fashion, investing in the stock market means purchasing of stock or divisions of stock through an ETF or an index fund, okay? That's about as watered down as a version as that I can give you, okay? There's no way of sneaking in the back door and finding some secret sauce to the stock market. Mutual funds are comprised of different baskets of stock that are put into a managed bucket and then sold to a customer for a premium. That's just a form of access to the stock market. And the trick really is to identify with how you want to seek out your exposure to the stock market, okay? If you want to do more research and you want to understand more about the stock market, that's great. But eventually when you take that little leap of faith and you enter into either a diversified ETF, for example, or you enter into some dividend aristocrats, maybe you like the dividend investing realm. I've got somebody here who threw up a very, very interesting technology portfolio. My good friend Ernesto was kind enough to offer his portfolio picks. And no wrong or right in the investing world. The bottom line is, does it have the potential to work? Okay. And what I mean by work is make you money. Because at the end of the day, we're not investing to be a participant. Okay. This is not a feel-good activity. This is a very, very mechanical activity that is very, very serious. And I do come on the live stream and I'm a little bit more personal with the group, but I certainly want to revolve around the discussion about the stock market in extremely serious terms. And now is the time to calmly be serious about the concurrent condition of the stock market. For folks out there that have existing positions in the stock market, I think that anybody right now, depending on your exposure limit to the stock market, whether it be small or large, you've tripped and fallen and made some money, okay? One of two things can happen. Either you can get overzealous or you can really look at it diplomatically. And I would really encourage you guys to look at it at the latter. I've made the comment here to the side, to the community, about how conservative I'm being right now. I'm not one of those guys that's really that gung-ho on throwing large chunks of capital to the stock market, and call me crazy. That's just what I see. I'm taking what the market is giving me right now, and I'm reacting accordingly to what I think is going on currently. Now, does that mean that I'm not exposed to the market? Sure I am. I'm exposed. But does that mean that I've pared back on some of the growth? For you guys that are fairly new to the live stream, I've done you guys a real softie, and I've offered my portfolio at the top of the actual live stream. I've got a couple channel creators in here I just saw pop in. I will call you guys out here and thank you for your time coming in and help support the discussion. Like I talked about a little bit with the maintenance of the car, there's all kinds of different mechanics out there, and some may get the job in a lot of different ways. Some are better than others. Some are more personable than others. I think it's really important to take that perspective when you're looking at gaining a well-rounded perspective about how people approach the stock market. And I do want to call out Brent, certainly, with the financial investor, because I don't think there's any single contributor to the independent investor community that really helps me with that very subject, okay? Now, I can be rest assured that mine and his investing philosophy are different, and that's okay. The value in it for folks coming in and looking to consume information are understanding how he approaches the stock market and how I approach it as well. And hearing those discussions, super, super important, rather than being subject to sitting across from a financial planner and you being the customer sitting there and you've got 1 hour, and you might not have all the knowledge that you need, but you make a decision because you know that investing is something that everybody's told you that you have to do, and you kind of get pressured into doing it. That is not the approach that you need to take now with the market. You can go as slow or as quickly as you want. The access is right there with a couple of pushes of the button. To have the ability to come in and hear different discussions. I've got Investing Wisely here in the group, is also a channel creator and is very, very good. Those different discussions that I've kind of talked about on some of the community can really, really pay dividends, no pun intended. But at least to get your financial stewardship up. And you know, what's the worst that's going to happen if you end up increasing or seeking out a little bit higher financial investing IQ? What's the worst that can happen? Maybe you get a little bit wiser on a topic that I contend most people need to be wiser on. They really, really do. So hopefully you take with what I'm offering through the Independent Investor channel as just that, being part of kind of a support, because there's all kinds of great information to talk about for investors in any stage of their investing career, whether or not they're at their beginning or the middle or toward the end, depending on where they are in their life, okay? Investing can mean something different to everybody. It doesn't have to be a cookie cutter approach, and I contend that it really should not be, all right? But I have taken the liberty of sharing a piece of my pie with you guys. So if you're lucky enough to be in the group tonight, I would encourage everybody to kick up to the top now. Be careful, because the first 2 links are one of 2 ways. I've got 2 out of the 3 ways I get paid on the Independent Investor channel, and 2 of those are to my affiliate links, both of which, if you do click over and you do end up committing to either one of those accounts, I'm involved and hold accounts with both of those brokers, both M1 and First Trade. Those are my affiliate links at the top. I will receive a small commission on that. If you are interested in checking out those 2 brokers, I will probably be moving on picking up Webull for the 3rd affiliate. It fits in the channel as a self-directed investing platform. It's getting a lot of exposure right now, whereas First Trade and M1 is not. I feel like M1 is probably the superior product, quite frankly, in the cutting edge broker, no cost to entry, very cutting edge with their platform. Quite frankly, very, very good with their mobile applications for you guys that have got in and dove into a little bit of self-study on the M1 mobile app. I think it's phenomenal. The improvements to the First Trade app is very good as well, but you just need to kind of pick your exposure. Now, the 3rd link at the top is to my personal portfolio. Last week, I revealed my portfolio through YouTube, and I'm not sure if people were scrambling to write down the stock picks. So I've taken the liberty of dropping those into an M1 pie for you guys. That is my portfolio. That's mine. That's portfolio 1. I will be doing that for the fixed equities bond holdings that I have. I only have 7 of them. That's not going to take me as long as this one took me. This one took me a little bit of time, but it's your guys's. It's free of charge. Have the pie. Put some ice cream with it if you want. Enjoy. You can see and back test that over the past 5 years. Keep in mind that M1 does not calculate the dividends into what I've been paid. I'm on kind of a track right now to about $5,000 of payout in dividends per year. So that does not calculate into the year-over-year return. So you guys can see how that performs. You can see how I have that allocated I will say that a couple footnotes on the portfolio. I have reduced my position in Blackstone. I took very good profit in Blackstone Group. It was one of those positions that I wanted to reduce some financial exposure, and had some really good profits. And I was actually fairly heavily weighted in financial, and it gave me the ability to downsize a little bit in that holding. So just keep that in mind. I'll be updating the portfolio as I make changes to the real portfolio. But how cool is that? I mean, for you guys that have been with me for a while, you know that in the Facebook group, I offered some cards. And in those cards, I was trying to basically break down what it is that I can do on M1 Finance now free of charge. And I can share those portfolios pretty aggressively through the Facebook group. That'll all be content that's offered free of charge. And I can't think of any better, more cutting edge way of getting the point across to you guys. Take it one step further. Imagine the ability of taking my portfolio and investing as little as you want in that portfolio. Now there's 33 stock picks you'll see in there. You'll see a couple of sector spider ETFs in there. You'll see a couple of Vanguard ETFs, but predominantly a dividend aristocrat dominated portfolio with a couple of growth stocks. I will also earmark, I took profit in CRM Salesforce as well. Okay. So my gift to you guys, please enjoy that. I do that for you guys. I thought it was the best way, and I'm always trying to think of those creative ways to pass information in a way, of course, to protect my privacy. Okay, in a way of the account holdings, numbers, etc., things like that. But I can think of no better way than to be transparent and push that out to you guys. You know, if you don't like the portfolio, that's great. You know, you can throw it in the trash, but it's kind of cool to actually see. You can back test it 5 years back. I can tell you the portfolio's performed quite well. It's outpaced the market. Don't think that that's something that you can do. That's not something that I advocate for. But certainly my exposure to the stock market has given me just a slight strategic edge. I work very hard for that strategic edge. Sometimes I just wonder maybe if it wouldn't be better just to go ahead and buy the S&P 500 and just sleep easy and go on with my day. But you guys know how interested I am in the topic and how engaged. I don't know if I could be as passive as that would call for in my investing, because I really like to get in and at least be active on the portion of the portfolio that I choose to be active on, and I'm rewarded for it. But you guys can go on there and see for yourself how, in fact, I invest in that. And do keep in mind too, please don't try to replicate the portfolio. And obviously, I have to do the responsible thing and encourage everyone to do their own research there. You're going to find that a lot of those stock picks don't really require a whole hell of a lot of research. I mean, you can look at the financials, balance sheets, etc. Every one of those stock tickers, symbols can be brought up on either Seeking Alpha, which is a very good website, or you can just bring them right up on the New York Stock Exchange if they're listed there. That's another good source for looking at balance sheets. To be quite honest with you, I don't want to send you guys down a rabbit hole. Investing in Apple computers and Home Depot is actually very, very simple for me. Very simple. Northrop Grumman, General Dynamics. I left you guys the new picks. I picked up Caterpillar this week for the first time in my life. That will be a long position in the portfolio. You guys see how I'm really kind of hedging the portfolio to hold the best of the best. That's what I'm aiming for. And that way, when we do enter into, or we potentially enter into, a downturn in the stock market, I'll be more than happy to take my aristocrats into a downturn with me and still call myself an investor, because that's the way we think. And I'll be looking at my opportunistic opportunity to actually pick up and accumulate more shares when the pricing gets a little bit more favorable, which I just don't think we're there right now. That's my personal decision, guys. for you guys that are out there buying everything under the sun, I would just encourage you again, as good as the stock market seems like it is now, is how bad it can be on the other side of the coin. I'm telling you, because I can't sit here and justify. I can tell you that the stock market, the underlying fundamentals of the economy are good, which they are, but typically the stock market does a very, very good job of finding those little fickle reasons to get sick and throw a tantrum. Volatility spikes, sentiment lowers, and then you've got a recipe, a perfect storm for the stock market to go down, and it'll go down, and you'll be wondering the same thing as to why it's going down so fast, just like we're all sitting here talking about why the hell it's going up every day. But listen, I'm not going to complain. I'm making money. Money's coming out of the portfolio like I've never seen it before. It's a proud day to be an investor. These are some of those rare moments that is nice to be an investor. Great, you're getting paid, but you see the reserve on my face. Okay, I'm not getting on here and jumping up and down. All right, for all those folks on YouTube that are overexposing to the stock market, if this thing does what I think that it's inevitably going to do, it's going to catch a lot of people off guard, and it's going to be a rude awakening. Okay, because the stock market is very, very good at lulling you into sleep, thinking that it's just going to do nothing but go up. I'm here to tell you the reality. And for you guys that tune into the Independent Investor channel, to not have me get on here and rah jumping down with some pom-poms and telling you that it's going to go to the moon, I will not do that. If that's the type of activity you seek through YouTube, find another platform, because you're not going to hear that from me. That, in all of my experience, is not something that I would never advocate for that. And again, I think it's going to be a rude awakening for a lot of investors. It'll provide them a ton of content. No doubt about it. You're going to see videos. I lost 50,000. I lost 100,000. It's going to be beautiful content, and people will go on there and watch it, because we seemingly like to roll around like pigs in mud when people are really struggling and have a bad day in the market. But heed my warning. Now's the time to really kind of take an objective look at it. And I know there's some folks here in the community who are taking the opportunity to put some money to cash, or keep your existing positions. Keep your existing positions, but start to aggressively fund that cash so you can kind of take advantage of a rainy day. All right. So I'm going to get to the group here, certainly. There's a few names in here that I don't recognize, and I'd certainly like to take the opportunity to get off my soapbox and hopefully put the focus where I like the focus to be, and that is, in fact, with you guys. All right. Few names here. Obviously, Starbucks and Google are going to come up. I missed that one. I had a swing trade of 10 shares in the hopper ready to push the button. I didn't. Your fearless leader on the Independent Investor did not make that trade. That's a trade that I typically would make. I bought Google twice on vacation. Swung trade it, made about $500, but that would have been well over $1,000 swing trade for me. I did not do it. And that's, I just declare that to you guys, not that you take it and you're like, whoa, I'm going to go swing trade Google on the next earnings. Listen, I have the capital to make those strategic bets, and I would go long the stock if it ended up turning south and the earnings missed and I was down $1,000. Okay. So the risk reward for me is a win-win. Either I get long a company that I love, or I take a short trading position and in 20 minutes I exit the stock with $1,000 cash, right? And I do so within the Roth IRA. Those are the types of strategic things that I set the stage for a little bit, because those types of short-term trading, those are not possible in Robinhood unless you want to go ahead and pay the capital gains tax as earnings. All right. So those are the types of strategic moves that you can kind of make and have those moves protected, even if you realize profit after 10 or 20 minutes. So think about that stuff. All right. Very cool stuff. I'm going to kind of scroll to the top here. There's a hell of a group in here. I really do my best to get to everybody. So I do apologize if I don't, but I'm going to try my darndest. We've got 25 minutes into the live stream, and you guys know how aggressive I will go until I fall over. Okay. Will do my very best. Bob and I had a very good discussion at the beginning of this thread here. I do have All Good, who's just awesome. It's really great to see you this evening. Part of the family. Yes, that's directly from me, live stream. So I'm going to put that down on this live while I have the opportunity. Welcome to you. It's great to see you. Brent is in here as well. So you guys can direct your questions to Brent to the Financial Investor channel. Certainly for you guys that are new, review the content after it gets posted to YouTube. You want to kick over and subscribe to the channel, okay? You need to start helping us build these smaller voices of if you like the approach and you like the content. And, I've been a little bit lean with my uploads. That's fine. I'm not going to apologize for that. This is my access here on a Friday night. I look forward to that. I'm certainly busy in some other endeavors, looking to upgrade some equipment on the channel. So I'm busy doing that right now. And quite frankly, I'm seeking my motivation back again. I've got a lot of topics building up that I will be delivering to the group. So please be patient with me and take your opportunity to catch some content when I do, in fact, put that up. A Financial Investor, doing a great job. You to kick over, subscribe, and help us build these communities up. All right. Let them know Brent's part of my community. So if you are, recommending the idea of self-directed investing, okay, his channel is Financial Investor, but he, make no mistake, is a self-directed investor himself. Okay. So he takes and leverages the idea and the concept for himself. And that's all we ever want. Okay. The only person I care about that takes this information, hears it, deploys it, validates it, puts it to work, and starts it working for themselves, guys, that is freaking powerful, okay? And I don't have makeup on. I'm not polished. I'm just a regular feller. But the information and the message, very, very powerful. You can sit here and watch a bunch of crap on regular media, regular TV. You can go watch a movie to entertain yourself. But give yourself a chance to come in and hear a message about taking control about your financial future. And that's about as blasé as I can say it. But a lot of people perk up and it gets people's attention. And a lot of people will not do it because the prospects of doing so is really initially insurmountable. Okay. So thank you to Brett for popping in. I know you've got a family as well, but you coming in and kicking around with me. Facilitating a discussion is fun. I don't know if you enjoy it as much as me. I'm a dork. That's fine. But it's great to have you in, and certainly to have multiple channel creators here to address some questions. Certainly just direct them toward those folks. Unless you want to ask me directly, you can do that. I've got Victor Hernandez, one of the first ones to pop in here. How's it going, guys? A long week. TGIF, staying consistent with my contributions to the Roth, and this hits on a fundamental nerve. And I told Victor that I was going to use this question to leverage the opportunity to talk about dollar cost averaging in this volatile market. I asked him how much he was contributing, but he gave me the frequency, which is pretty aggressive frequency. He's doing $100 a month. That's a pretty aggressive funding schedule for you guys that can do $25 a week or $25 a month. I encourage you to do so. I was that fellow when I started. I started with $25 a month. And whatever your funding limit is when you start, the way you kind of deal with this volatility is to set up a dollar cost average schedule that you're comfortable with. And don't seek your validation when you're looking at your M1 account on your iPhone. Sometimes too much access can be problematic, okay? I dealt with this a little bit today when I was trying to explain that. When you start investing, it's so difficult to take your attention from the dollar amount to the share accumulation amount, okay? And M1 really is, it's cutting edge, and that the portfolio reinvestment of the dividends is cutting edge. I don't know of any other platform that does it, okay? It must be very complex in their formula in how they're taking the dividend and putting it to the lowest holding within the portfolio. But it's really cool. It's very, very cool. And come to think of it, I'm going to share my Spider portfolio. I don't know if I've ever done that. That's another portfolio that I need to share with you guys. I think I've dropped it in the Facebook group. If you haven't joined that, please, I drop a lot of content in there too. So a lot of different properties that you can pull, a lot of different information, compounding calculators, learn about dollar cost averaging, learn about the effects of contributions using the compounding calculator that I insist that you use, that takes into account the fees over your accounts. You can run a comparative analysis of two accounts. I speak big, guys. It's very simple. Okay, you take a starting amount, you take an anticipated rate of return, and you can play with that. Okay, I always start with 7, default with a 7, push it up to 8, and see how it changes at 40 years from now, or 30 or 20, whatever you want. But it allows you to enter your expense over that account. So enter in 0.03, which would be indicative of the VOO, and then put in a 1% expense and a 2% expense and run the report. And you'll see what I'm talking about when you compare that low cost passive ETF product and compare it to the 2 and 3% management fee that are traditionally paid. Okay, we're not going to get to everybody. But I tell you what, man, for the 1,000 people that will review this live stream after I post it to YouTube, and the absolutely beautiful people that make their way into the live stream on a Friday evening real time, I'm in debt to you. But at the same time, this information is liberating. It really is. The power and prospects of taking control over your financial future cannot be denied. Okay, and I would highly encourage you not to just take it from me carte blanche. Run the compounding calculator. That is the most important tool to validate everything that we talk about on the Independent Investor channel. My 300 videos are all pretty much leveraged from the prospects of compounding effect within a free and liberated account. In other words, a self-directed account that doesn't consume your money over time, right? That's subject to fees, okay? We eliminate the fees. We put that money to work in there to compound unobstructed into the future, okay? I just summed up the Independent Investor channel for you guys that aren't interested in hearing me rant anymore. You just got all the information you need to go and succeed and be a self-directed investor. The trick is you will have had to have heard me, okay? So good luck to you if that's what you want to do. I've just empowered you, no doubt about it. But I think for the folks that come in and get the support, it really helps sharpen your investing IQ. It really helps sharpen your perspective because the stock market doesn't allow you to get complacent. It doesn't. It requires you to be an astute student of the market. It requires you to keep and continually evolve with your check over your emotions. Okay, it continually requires you to evaluate your level of exposure to the stock market. Remember how I talked about exposure comes in a very finite amount of ways, okay? Stock is the most rudimentary. It's the way I prefer to seek out the majority of my exposure to the market. If you want to be diversified and buy the market, you can do so, all right? But that's just another form of stock, okay? But it requires you to continually evolve with evaluating your level of risk to the market, okay? I had Ernesto drop an interesting share. He's got 100 shares of Apple. That's incredible. That's over a $20,000 position in one of my favorite companies. It's phenomenal. I absolutely love Apple. And if it were going to be any company that you could do that and hold a nice, sizable 2 stacks of high society position in, Apple would be that company. That's awesome. But just to make sure that relative to the overall portfolio value, understand that by putting your chips into Apple, which in and of itself has a lot of diversified businesses within the company, okay? So I'm not downplaying Apple, but here's the thing. Single stocks, there's no stock out there that's not subject to a less than average earnings report. Amazon, Tesla, right? There's no stock out there that's subject to immunity when it comes to data and personal privacy. Facebook, right? So the scrutiny that the government is putting on these big tech companies could maybe put a little bit of pressure on these darlings. Now, Google just reported a phenomenal number. They beat on both the top and bottom line. It was a phenomenal quarter. And again, I love these companies. I really do. But the risk tolerance and the level of risk tolerance that you have to justify that level of exposure. I've talked to a lot of people who say, Ryan, I love investing, but I don't want to own one single stock at all. I remember Xerox, I don't want to see that happen. Lots of companies that we have learned to love and seen come and go over time. The staying power of a lot of companies in the S&P 500, it's amazing how much churn actually goes on in the S&P 500. And by just owning the entire market, it guarantees that you're always getting the most relevant companies, especially if you're looking to evolve over the next 20, 30 years. Who the hell is going to come on to YouTube? You're sure as hell not going to hear it from me. Come on to YouTube and talk about, yep, these companies are guaranteed to be around in 30 years. It would be more prudent of me to come on and say that the odds are that they probably won't be. They will be some form of a different company, or the company that's bought up another company, right? So the churn in the market, competition is fierce, guys, right? So the diversification by owning the entire market guarantees that you're consistently having that access to the top tier companies, and that the bottom tier companies are constantly being rotated out of the S&P 500, for example. Okay? All right. Good stuff, guys. For you guys that are making your way into, if I'm catching the 70 people that are here now, I hope you're enjoying the live stream, the entertainment. Again, no makeup. And again, I trip up on my words sometimes, right? And I do that because I'm a regular person, all right? I'm a regular person, okay? Sitting across, delivering an idea and a testimonial on how I approach the stock market. But if you are one of the 71, kick over, hit the thumbs up for me. Let's see if we can't energize and throw something into the Google algorithms to maybe pick up and give a little bit of love to the Independent Investor channel. I'm 300 videos deep, and I'm still waiting for my first viral video. I don't even know what that is. Evidently, I don't know how to create them. So if you are in here, hit the thumbs up, help us support the channel. That's all I've got to say about that. Ernesto's in here as well. And thank you, Victor, for sharing that dollar cost average schedule. Pretty aggressive, right up against the maximum cap for you, right? 500 being that. So good for you, man. That's awesome. Keep doing it. And good luck to you. That dollar cost averaging ensures that you're getting a good entry point very, very frequently. So really good stuff. That's really going to help you. All right. I got Greg Cammie, great friend of the channel, making his way in here from one of my favorite places. It has to be. That's where I met my wife. Los Angeles, California. You betcha. Lots of action in Los Angeles. Lots of energy in Los Angeles. The only place that I've been to that's got more energy than Los Angeles, and I don't want to offend you, is New York City, Paris, and Prague. But it's a cool place. It's nice. He says it's hot as hell out there, which is surprising. It's because last week was 114 degrees here in Virginia Beach, which got rated one of the #1, if not the #1 city to move to in the United States, interestingly enough. Throw a little fun fact out there. There's a good reason for that as well. A lot of activity out here in Virginia Beach. So perhaps maybe kicking myself a little bit for not investing in real estate here, but not really. So another discussion perhaps for another day. So Bob writes in here. He's a great conversation with Bob. as well. Let me kick down here. K97 popped in here and dropped a really good comment. I do want to get to this. Wonder what the latest you can trade in the morning on M1. I've done a trade around 10 Eastern. So that's really good. You guys are feeling out the platform. I'm doing the same. I just caught Brent's video. I mentioned this last Friday, but Brent's video on pies within the pie and how to set up your personal pies, really, really good. And I've got my mind going on how I can leverage that opportunity to share custom allocated portfolios for you guys. That's going to take the place of the cards that I initially had within the Facebook group when we started that group. So it's going to be a lot cleaner product if I can just leverage the M1 opportunity. M1's not going anywhere. I'm up about 7.5% in the Spider portfolio, up just a little over $100, a little over $1,750 in the portfolio, up $100, a little dab of dividends in there as well paid. I'm enjoying my sector Spider approach there. You guys know that I'm just involved in the 11 sectors. Custom allocated by myself, and I've shared that in the Facebook group. I may share that again as well. So if you're not part of that group, you guys need to kick over there, certainly. A lot of great folks in there. I've already seen a couple of the administrators of the Facebook group pop in here, and I appreciate your guys' time. I've got Ernest and Jared in here, who if you guys know and have got a response from either one of those two folks, very, very sharp, different approaches. And that's a beautiful thing. I'm all about diversity when it comes to opinions on investing approaches, okay? And these guys are awesome. These guys really help me a lot, address a lot of questions within the group. Just another support nexus, which meets a little bit of a specific niche for me. I use that to drop articles, tools in investing. I'm monitoring a little bit the sharing of other channels in there. That really wasn't the initial intent. But again, there are no community guidelines within that Facebook group. And I'd like to keep it that way, to be honest with you. I think as long as there's good intent in the sharing of those products when they come into the Facebook group, I'll continue to allow that, but we will monitor it going forward. Okay. All righty. I got player one in the group here. Hi, everyone from the UK. That's really cool. That's cool. I just saw a friend request pop into my Facebook account. That's funny. It has been handy if there's a big drop or a gain. So back to what K9 was talking there about the M1 opportunity and trading. I'm going to tell you guys my initial positions in M1 finance. I have not made one sell. And I don't intend on doing that. And if you guys come into the independent live stream to get value, and I would really, really hope that you would consider using M1 from a very, very passive perspective. If you want to trade stock, that's great. Go ahead and do it. I'm not your dad, okay? I'm just a channel creator talking about financial options and what some of those cutting edge products can allow those needs for you, the customer, how they can make that happen for you. But M1 Finance is a passive platform, okay? If you want to own single shares of Google, Amazon, Facebook, NVIDIA, Netflix, PayPal, Adobe, and some of those high-flying kind of stocks, Booking.com. I think Booking.com is getting close to $2,000 a share. But M1 Finance gives you option to enter into partial shares of those companies. And hell, you could build a custom growth portfolio, which is what I'm going to do for you guys, and share those, okay? Make it equal weight, 10 shares, 10% of the portfolio goes into partial shares of each of those. And you can be an investor. It doesn't take $2,000 anymore to buy a share of Booking Holding. It doesn't take $312 anymore to own one share of Adobe Systems. You can invest in basically your own custom high growth tech ETF, for crying out loud. For lack of better terms, that's what it is. And the cool thing about it is Owning single stock doesn't carry any expense ratio. All right, so you can do away with the little frivolous stuff. I mean, it's a race to zero right now for most of these major brokerages. Vanguard 0.03, some of them are no-cost brokerages offered on the platform. Sooner or later, they're going to figure out that it doesn't justify that. It justifies bringing in capital with the flagship products and then them taking those investments and investing them how they see fit on the back door, right? And then guaranteeing your account holdings, guys. That's how banks work. Okay, I don't mean to scare you, but that's just the reality of how banks work. Okay, you think your $2,500 is actually sitting in the bank for you? You need to do a little research. Okay, that's not how it works. All right, they are guaranteeing that electronic figure that you have in your savings account is guaranteed to you at any time if you go in there and want the whole thing. Okay, they just don't hold it for you. All right. All right, good stuff, man. Awesome. Chris Hood says, new subscriber, welcome to the channel. Very, very good. Consume some of the content. I've given you a summary about what this channel is all about. I'm definitely, look, I enjoy making YouTube videos. I really do. I couldn't have known how I would appreciate the YouTube opportunity when I started. I had no freaking idea. If you have any inkling at all, go watch my first video. It's kind of funny. Okay, that's me. That's me. I'm nervous as hell. You ever tried to film yourself? Try it. Try to film a YouTube video. You guys that have been with me know that every single video in my catalog, I haven't scripted one of them. I press play on the GoPro and I throw down. That's how I do it. Okay, but I've evolved a little bit over time, but certainly consume some of the content. I don't know, if you're in your 20s, 30s, 40s, 50s, the information is relevant to everybody just from an awareness perspective, first and foremost. A lot of people don't understand, that this even exists. So that's first and foremost right there, is to understand that there's a difference between a managed Roth IRA and a self-directed Roth IRA. The latter option, most brokerages hold it, but they don't openly advertise that. You got to ask for it. And a lot of people need a little bit of encouragement to have the fortitude to say, I want that, okay? Instead of, I guess I want this over here because I guess there's no other option, right? Financial institutions have found a way to put their feelers in on what is your right to that account, okay? So the Roth IRA, play with me for just a second, is a benefit to you. Every year that goes by that you're not taking advantage of the 6,000 contribution is a benefit that is going away. It's dissolving away every year. Now, I don't want to scare you guys, okay? But the thing about it is, if you're contributing $1,500, you're contributing $2,500 and you're realizing part of that benefit back that the government has given to you to tax protect money until you're 59 and a half, right? All good and plenty. The problem is, in theory, that's a beautiful account. The problem is you'll have somebody come in and they'll want to start a Roth IRA and they're 18 years old, 20 years old, 30. Maybe they're getting started a little bit later. Maybe they're 30, 40, and they want to start a Roth IRA. And they're sitting across from a financial planner who is trained to sell you product, okay? So they are going to jam-pack that Roth IRA, your God-given benefit, okay, and subject that protection to a bunch of expense ratio, okay? There's going to be a bunch of expense. That's why traditionally, if you go into a financial planner, don't you ever wonder why they're always looking to sell you mutual funds? Do they want to sell you ETFs? What benefit to them is it for them to sell you a low-cost product like an ETF that tracks the market? For the most part, outpaces the market and will outpace the mutual funds that they're selling you for a higher than average expense, usually around 80 basis points to around 150 basis points. I've seen worse. What I mean by that is look at the expense ratio of the mutual funds that you're being sold, guys. It is a freaking eye-opener. And you'll see 0.85 expense ratio. If you look at that and you're like, okay, that doesn't sound like much, run it through the compounding calculator like I insist that you do, and you'll find out that that will cost you tens of thousands of dollars, and in some cases, hundreds of thousands of dollars, because it's not just the expense ratio that they're attaching to your God-given right. It's not just the expense. It's the yearly fees, it's the dividend reinvestment fees, and it's the dollar cost average fees. Yes, I said it and I'll say it again. The dividend reinvestment fees and the dollar cost average fees, which for any self-directed investor knows that is a setting within the account. It's a setting. And once they set that, they'll set it one time and then they'll take from your account every single month because that's a service that they've sold you. It's crazy. It's freaking crazy. Why do you think I came out with the channel? It's amazing, man. Why do you think I sap up the motivation enough to come on here every Friday and talk to you kind people? Because you need to know this. You really do. It's amazing. I've had so many people say, I looked at my statement for the first time, Ryan. It's amazing. I see that they're charging me 5.75%. And I'm speaking out about my old brokerage specifically, but I've had this validated again by other investors, family members, etc. They look at their program and it's like, I don't understand why I was sold 4 mutual funds. Remember my God-given right over here? I don't understand why they jammed 4 mutual funds into this account for me. It's because they can take 5 3/4 basis points and charge you on that little $25 contributions that you're making to each one of those, like they're not making enough, you know? I put out one of my favorite videos where it shows Austin Powers on the front, you know, not Austin Powers, but Dr. Evil, right? And it's the $1 trillion celebration. It's one of the least popular videos, but it's one of my funniest videos. I'm going to put it in. I've just redone my playlist on the Independent Investor channel, and I have some of my favorite videos in there. And ironically, it's not some of my most popular videos on YouTube. And I was truthful with what I put in there. And that's one of my funniest videos where I talk about Edward Jones going over $1 trillion of assets under management. $1 trillion of your money. And you wonder why they have an oak desk and a fake tree in their corner of and they can take their clients out to golf and they can go to buffets and year-end banquets, and they can seemingly have beautiful offices in every strip mall on every corner of every city across this great nation and seemingly never have a customer in there consuming a product. Where's the product? What are you selling? What are you selling? I just ran down the product list for you, baby. Expenses, dividend reinvestment, annual fees, dollar cost average fees, and it's all disclosed for you guys, all right? That's my rant for the new subscriber. Welcome to the channel. I remember very, very distinctively where I was brought to this subject and changed my life. Changed my life. Now, it did certainly align with my existing passion with investing, but I can tell you this much right now. I look back at how I was as an older investor or as a younger investor when I first started. I did everything wrong. It was wrong. It was wrong. And my portfolio suffered during a time where it really shouldn't have suffered. When I get my statement at the year end and the market's up 12% and my mutual funds have lost money, I don't understand. I'm with a financial planner. I look at that. Now, this was my demand of the financial planner. This was my expectation that they were going to provide me some sort of strategic edge in the market. Where's my strategic edge? I lost money this year. This year is come and gone, and I've lost money. I've contributed like I'm supposed to. I've done the dollar cost average, just like I talked to Victor and gave him kudos for doing so, right? I've done everything that I've needed to do. I want to be an investor. I tried to pick the best mutual funds that you could offer me. And at the end of the day, this is why I talk about at the end of the day, investing is about money. It's about your financial security. It's about gaining as much money as you can. If you pick a Vanguard product that doesn't work for you as well as the S&P 500, conversely, if you pick the S&P 500 and maybe the VIG outperforms, or maybe the VYM does a little bit better, Or maybe the sector spider ETF for healthcare outperforms for the last 3 months. Don't beat yourself up about it. You want to give yourself the best chance of success. And typically the way to do that is by buying the broader market and passively putting those assets into that account that I talk about. All right. So those accounts at the top there, certainly kick over and explore them. I don't care about the kickback on the channel. I just have to disclose that there's a possibility that I get paid for that. All right. Which I don't feel bad about. I use the product personally. They're good. I'm a little more happy with M1 Finance. I have a video on YouTube about my criticisms of M1 Finance, and those are all still legit. I still feel the same freaking way about it. But I tell you what, I just bought some more stock on First Trade, and that is another platform that I use, and I haven't sold one single stock on First Trade either. That account is approaching very, very close to $5,000. So I'm very close to 50% of my goal. You guys remember me mentioning I did that for a reason. I did that to prove that new investors' goal should be to get to their first $1,000. Then right after that, it should be to get to that first $10,000. If you can get to that first $10,000 milestone invested in the stock market, you're off and running. And I will consider a group of self-directed investors, each of which have met that goal, that is absolutely achievable. It's achievable. Anybody can do it. A group of self-directed investors with that type of capital invested from a self-directed perspective is powerful. It's powerful. It's taking back some of the power and putting it into the hands of where it should be. And that's with the people. Why? Because y'all are the ones taking the risk. It's not the financial planner sitting across the table trying to sell you a product. They are not taking the risk, folks. They are not. You are, okay? And they are profiting from it. My stance is if you're going to take the risk in the stock market, you should be the one rewarded for it. Not me, not anybody else. You, all right? That's where we put the focus, man. Welcome to the community, Chris. It's great to have you. It's awesome, man. I've got one of my great friends, the one and only Doug Whitaker. Awesome to see you, my friend. Very cool. Great to have you pop in here. Andrew Chapman Trading also is a YouTube creator as well. My good friend from Australia who I would love to make it down there someday, man. I swear, if I had enough time on this earth, it would be kind of cool to meet some of these folks. And you're definitely one of them. I got Greg right below. Greg's one of them as well. I do foresee if this independent investor channel does end up taking off, I'm crazy, guys. You'll see a different set. I will invest in this idea like I already have. I will meet and do conventions. I'm serious about that. I think I would probably be in my element in a forum, in a convention, where I could speak to a few thousand people at the same time. I would approach that the same way that I approach this. And sometimes that genuine approach is what people really connect with. It's what I connect with. And it's quite frankly what I demand. Because if I sense for a second that somebody's coming from not a genuine place, I'll leave. You won't get any of my attention, man. And I hope you guys hold me to the same standard, and I believe that you do. All right. I got JMac Investing, another channel creator in the group here. It's great to see you, my friend. Great to see you come in. Thank you. Thank you for coming in and helping us build the movement, the community, and strike up a dialogue about financial stewardship. I really appreciate it. Conrad, good stuff. I like stocks. Stocks are good. That'd be an interesting, catchy title. That's typically some of the topics that I come up with in my title. Maybe that's not why I get any viral videos. It could be that I'm just boring as hell. I don't know. I don't really care, to be honest with you. I don't care. At the end of the day, I sleep easy knowing that I leave it all on the freaking table, baby. I leave it all on the freaking table. And the ironic part about my message is if you listen and you dare to learn, you might trip and fall and have the most chance of success. You betcha. That's real talk. All right? Good stuff, man. Let me try to cruise down here. I'll wait till Google dumps a bunch of comments in here. I already talked about Jared Odell really being one of the administrators you want to kind of keep your eye on in the Facebook group. Another one of those folks I'd actually love to I'd love to shake his hand one of these days, man. Just an awesome person I've known, been part of the community, has grown with the channel as slowly as it's growing. I guess we're aging probably faster than the independent investor channel is growing. But all the same, a great friend of the channel, a great friend of mine, has been very, very helpful to me and has helped a lot of investors. So if you have the luxury of having Jared Odell give you that reply in the Facebook group, you're probably wiser for it. All right. Conrad says, I need $50K in 5 months so I can afford the new 2020 Corvette. That's sick, dude. I don't know. You're going to buy a 2020 Corvette with 50 grand? It's going to be the Stingray. It's not going to be the real one. I mean, even a Grand Sport's going to be about 70,000, and then the ZR1 is going to be probably over 100. But that, my friend, that's my dream car. I could go buy one now with cash, but it's it give you a little perspective, I guess. To each his own. I don't care. If you want to go do that, I was happy with my friend Ryan Scribner that treated himself with a nice Nissan GTR. I guess that's very nice car. Not one I'm interested in, but nice, good for him. I'm stoked. He keeps it in the garage when it snows up there in upstate New York. But I love the guy all the same. And certainly if you can do that, what I would say from an investing perspective is if you're going to save up for a car, that's admirable. Know that a car is certainly a depreciating asset and not an investment at all. But don't approach investing. For example, I see this all the time where people want to mix and match. I want to invest and get $25,000 for a down payment on a house, or I want to invest $25,000 so I can double my money and have the $50K for the 2020 Corvette. I would say if you want the 2020 Corvette, go get it. Again, I'm not your father. I'm not gonna tell you not to. Hopefully, you heard me out. I'm 41 and could buy one now, but I just bought a new vehicle. I should chronicle it. It's a 2019 Toyota Tacoma, which for you guys that know, my old vehicle was a 2005 Toyota Tacoma. So I always said if I was going to get a new vehicle, I'd take it and buy the whole thing. And the exchange took a few hours. That's it. I rolled up in the lot with my old one, 200,000 miles, which really isn't that much. They checked it out, gave me the trade-in value. That was it. I could have sold it private. I chose not to for reasons I won't talk about. It was just easier to take it on there, but rolled off the 2019 for safety reasons and a lot of improvements. But that's my Corvette. So that's just what I ended up doing. But Conrad, man, good luck to you. If I can be of help on the investing side of the house, let me know. Hell, if you're a lawyer in downtown New York or a stockbroker in Chicago or whatever you're doing in LA, man, and you've got that kind of funds, man, have at it. I can't blame you. Quite frankly, from a supercar perspective, I don't think it gets any better than the Corvette, to be honest with you. I love them. I think they're awesome. So, and I will have one someday. I will. Yep. I'd rather have a Corvette than a boat. All right. I got Andrew Trapman. Hey, Bob, go Cops. Absolutely. Good stuff. Financial investors in the group here. Good luck on that, Conrad. Bob's not going to offer any words of wisdom, maybe. That's kind of funny. That strikes up a dialogue. I don't judge. I don't really care. I like success. I like people who strive towards something like that. I myself am money motivated. And as shallow as that can be, part of the trick in life is to identify for yourself what it is that motivates you. Maybe it's not money. I mean, I just went for a run before the live stream tonight. I'm gimped up for sure. I jacked up my calf, but I still did my run through the big houses so I could get my motivation and kind of keep myself fresh and keep myself pursuing something. And I'm perfectly content with not meeting those financial pipe dreams that I have. At the same token, those are what kind of life is about, man, as far as I'm concerned. And the few things that I've been able to realize with regard to blessings, we talked about that with Mr. Bob Wright at the top of the show. those are the things that I really embrace and appreciate. And for those folks out there that actually have appreciation, if I was ever driving around in a 2020 Corvette, I'd have appreciation coming out my freaking ears. So good stuff, man. I don't discourage somebody from success. I actually encourage it. I think people should have more of that hungry attitude, because self-directed investing in and of itself takes a little bit of looking in the mirror and saying, I can do this, and seeking out the avenues necessary to validate why it is that you do it. Okay. It comes back to these rhetorical questions. Why would I do this? Why would I enter into something that nobody does? Okay. Why would I ever invest? Why does it make sense to me? I don't understand. I put $1,000 away and I'm down $100. I don't get why I'm doing this. Okay. You need to work really, really hard to find those substantiations as to why you enter into the stock market in the first place. Okay. And I can help you answer some of those things by answering those questions from my perspective. But it's not going to resonate with you guys unless you go through the exercise and help yourself, right? Help yourself identify why, in fact, we're doing what we're doing. All right. Good stuff. All right. It's been on sale here. Let me try to cherry pick some of these. You guys got a hell of a discussion going on here on the sidebar. Let's hit the like button. A lot of people did. Thanks for that. That's awesome. Either that or I scared the 6 people that aren't in here anymore out of a independent investor channel live stream. So no big deal. No big deal. There's a lot of different personalities, man. When you put yourself out there on social media, it's amazing. There's a ton of different personalities out there. And I think there's a lot of common threads that can apply to a lot of people. For example, I have a lot of people from around the world that say, Ryan, I watch your channel because the fundamentals are good. I just wish I had an opportunity to do what you all have the opportunity to do. So think about that. For you guys that are coming in here and you're like, this guy seems to know it all. You know, I could do this and I could do it 10 times better. Well, take a step back for a second and say, and just realize how fortunate you are to have the freaking opportunity to do it. Because again, I have people that pop in here that do not have access like we have access here in the US and the way that the Canadians have access in Canada. Okay. And there's a few other places. I can't speak for Andrew. I'd love him to drop a comment on how accessible it is, but I'm trying to tap the community on how accessible this program is worldwide. I can only speak to the fact that a lot of Americans don't necessarily make the best investors because they've got their head up their backside most of the time, thinking that they're privileged all the time. That's a real criticism. That I'm sorry if I've offended some of you guys, but I tell you what, some of the folks that are locked into their program, they would never, ever come to an independent investor channel like mine and be like, wow, that makes sense, and have an open mind enough to be like, you know what? Wow, this guy's not selling me anything. You mean I can check this out for free? Holy moly, let me check out that compounding calculator. He's going to be wrong. You know how people are. It's crazy, right? And just go check it the hell out. And those are the barriers that I deal with all the time. And quite frankly, I don't have the time for those types of people. I don't. I would rather work with somebody from another country that is so hungry for this information that it means the world to them, even though they can't invest. There's some freaking perspective for you guys, some perspective. All right. So for you guys looking to justify the program, happy hunting. I'm there to help. All right. That's why I put the message out there. I've already done so for myself, and I will meet my financial goals. And I would encourage each and every one of you guys to follow suit and find your financial goals for yourself. Okay. I provide the tools and the awareness. That's all I can do. And again, at the end of the day, I leave no stone unturned. If there's something that we evolve in the channel with regard to the M1 pies, I'm sure that some of the channel creators are probably hearing this, if not already. I don't know. Brent's probably firing away on a video right now. Good. Let's get the awareness out there, man. Let's start to put some interesting products out there. I mean, the SPHD, for example, right? It's the 50 dividend holders. It carries with it a fairly expensive expense ratio, 30 basis points for an ETF. A little bit high, right? Pays a 4% dividend, pays it every month. Whoop-de-doo. Great. Awesome. All right. I'm the customer. I want my bang for my buck, but I own 50 of the I don't know how Invesco rates those. I don't know. I'm sorry. I don't have that. If you guys know what criteria Invesco runs those 50 stocks through, I'd be interested. But what's to prohibit you guys from looking at that list of 50? It's openly disclosed, and just dropping those names into M1 Finance, for crying out loud, and paying no expense. What is the difference? There's no Ford to the second power that you're investing in. It's just Ford, and it's one of the stocks. Weyerhaeuser is one of the stocks. What's to prohibit you from just taking those 50 stocks and dropping them into M1 Finance? Now, keep in mind, you guys are going to identify that you can only drop the percentage down to 1%. All right. So you're going to have to round either up or down. You're not going to get to go in there and put 25 basis points of a percentage of allocation within your M1 pie. But good grief, use your freaking imagination. Is it not enough if you're that hell-bent on buying SPHD to just go start an M1 pie? For you guys that are interested in M1 Finance, at least kick over, start an account free of charge. Get yourself familiar with the platform. Go to the research tab, go to My Pies, and start building out some of these products. It's a hybrid way of building watch lists. It's a cool way of visually demonstrating the holdings that you're interested in a pie function. It's just cool. It's freaking cool. It's growing on me. All right. It's growing on me. My criticisms of the platform are still standing. They really are. It's not a top tier broker. It's not a Bank of America. Every now and then I'll be logged into M1 Finance and I'll say an error has occurred and I have to log off and log back in. And here I am. I'm just like, Jesus, this is my broker. Like, come on, guys, get it freaking figured out, you know? But really, really good stuff. Really good stuff. Says Light. I played with one of the shares of Tesla when it went south. What a ride. You're braver than I am. That's good for you, man. I mean, took a trading position and you won. You won with that one share. I'm reading Bob Wright's comment about actually putting some money on Tesla. So K97 3M's down 2.5% today. Keep an eye on that. And J&J next week. K9, thank you for that offering. Very smart. Absolutely. JMac, I just subscribed. Agree on hitting the like button for you. Thanks, JMac. I appreciate that. I wasn't sure, JMac. I just subscribed. That's coming from Ernest. I'm not sure. Ernest has been with me for a while. I don't think Ernest will ever unsubscribe from the Independent Investor channel. It'd send a shockwave through the freaking community and notify me and be like, Ernest, man, one of your long-standing subscribers just unsubscribed to you. My phone would start to melt, you know? No, man, wouldn't happen, man. We're after loyalty here. I'd rather have 15,000 loyal subscribers than 100,000 idiots on my channel. No way. No way. I'm not about that. I will earn your subscribership one subscriber at a time. That's the way I roll. Because I just don't care. The only thing I care about is loyalty. That's it. It's the only thing I care about. I don't care about the numbers piece. All right. I'm strategically putting some money makers in the channel so I can potentially get compensated for my time. I just told you guys I'm fairly money motivated. So if I can build this project up in the right way, then I'll accept the financial ramifications from that initiative. No problem. And I won't apologize for it. I'll do some great things with it. I really will. But I want you guys to feel like you're part of something special. I do. I do. I've always said if I'm going to do a project, we're going to try to do it right. Love drinking a beer. I should go get my last one. I've got a Stone in my refrigerator that I'm going to have probably after the live stream. Now you've tempted me to go grab it right now and have a beer with you, J-Mac. God dang, listening to Ryan go off on investing philosophy. I do that for a reason, because so many freaking people want to focus in on the product. And I know you guys have heard me say this before, but remember how I summed up the index, ETF, stock? Investing is about owning stock. Okay. And again, I leave the bond piece out of it. All right. But if you want a holistic answer, investing is owning stock and bond in the specific allocation that you choose. That's investing, okay? But if I gave that to a new investor and said, investing is all about owning stock, that investor is going to look at me like a deer in the headlights and not know what in the hell to do. All right. Now, I can put a few tidbits to success out there and say, take a look at this account. Take a look at the prospect of self-directed investing. Take a look at dollar cost averaging. Take a look at the effect of compounding over time. You want to know what they're going to do? They're going to look at me like deer in the headlights and not move. That's just the way it happens. So we have to talk about why. We have to. We have to, because we're trying to set people up for success. All right? It doesn't do any, and that's why I'm so hard on the other YouTube channels. And I know people come on and they're like, you should let them talk and you should let them do anything. Bullshit. I can't do that. I can't. Because it's not talking to the investing philosophy, what people should be talking about. Should you be an investor? What type of investor? What account should you have? What are your financial goals? Somewhat cliche, but very important. Why the hell are you investing, right? Do you want to own dividends? Do you want to be passive? What do you know about passive investing? What is a dividend? What is a stock? What do you really own? What are the tax implications of becoming an investor, right? Why are you investing? All right. I've got some very deep answers to that philosophy that I touch on all the time, man. When I go through the line at Walmart and there's somebody that's, 65 there, it breaks my heart, man. It breaks my heart because I don't know if that person they may be wealthy. I don't know. But here's the fact. Too many people are entering into retirement age and they don't have enough wealth. They don't have enough financial security. And you want to know a deeper truth? I could give two shits about the money. I don't care. Okay? I care about the security. I care about the plan. So if we're not revolving around the philosophy, then I'm just offering 3 shallow stock picks every month, and I might as well just shut the channel down because we're not helping anybody. They're going to go invest in those 3 stocks, and they're not going to know why. Why do I own Callaway Golf? I don't golf. What the hell? And I golf, right? It's a great company. I don't own Callaway Golf, all right? I can tell you that. But you see my point. So we have to revolve around the philosophy, man, and chatting it up with other like-minded investors on Friday night. I try to touch on the themes of what I feel could potentially be commonalities amongst people, but I fully expect there's going to be enough individuality when you go and apply this for yourself, all right? I've got people who come to me all the time and they're like, man, I researched this avenue. This makes sense to me. And I'm like, dang, that's awesome. A lot of people have been on Caterpillar for a while. And I just entered into it for the first time. You see it reflected in the portfolio pie that I shared with you guys. Everybody seeks their exposure in different ways, in different forms. And maybe you outperform a little touch. Maybe you underperform a little bit. Maybe you guarantee that you match the market with a certain percentage of your portfolio. Maybe it's 75%, right? This was the general idea when I came out with my cards on the Facebook group to say, look, you can be any type of investor you want. Don't limit yourself to one style. I think that's from Bloodsport, I think, right? Yeah, one of my favorite movies, Frank Dukes. Anyway, so that's the key to I lost my train of thought. I was thinking about the Kumite. Anyway, but yeah, man, we try to talk about the common threads, but certainly acknowledging that if those common threads don't apply to the masses, then what are we trying to do? You might as well just go in, accept the status quo, sit down with a financial planner, let them sell you on a bunch of garbage that's going to underperform the market over time and make them even more wealthy. Why? Because that's the status quo and nobody was brave enough to challenge it. Right? It's good to have you here, J-Mac. You got me thirsty now. Thanks a lot. Appreciate that. And I've got about 45 minutes until I can drink that beer. So good stuff, man. Is it relaxing time? How much higher do you guys think the VOO is going to go? Larry Massa, another great friend of the channel, devote subscriber as well. That's another thing that you have to consider right now when you're looking at buying the market at a 12-year bull market, historic proportions, right? How much are you expecting on the upside? I think to answer that question, what I would say is invest full well expecting a downturn, okay? What I mean by that is position your money to where you can double up that position no matter what it is, all right? If you're sitting on $25,000 in the VOO and you've got a long-term horizon, make sure that you start to mentally condition yourself, because if that money does correct back, okay, 30, 40%, it's not going to be fun to watch. I'm not going to sugarcoat it for you. It's not going to be fun. But the best way that you can prepare for that is to have that side cash that I talk about. Mentally prepare yourself with regard to what the stock market is capable of doling out at any time. This could happen next week. I don't know. We could go 2 years and continue up on an upswing. And if you're invested in the VOO, if you're invested in the S&P 500, you'll gain from that. I think the idea that I throw out there, I'm so adamant that people hear me in positioning your money to win in an up market and a down market, okay? Don't just put your money to work with the hopes of just always going up, all right? It's done nothing but pay you back right now. But ultimately, if the market does end up moving back, adjusting back, sentiment changes a little bit, and it's moved up so fast that I think that the move down could be a little bit of a rubber band effect until it finds its bottom a little bit. And how could you potentially profit from it? Joe Carlson talks about this all the time with regard to the posture right now with the stock market at an acknowledged all-time high. Now is not the time you want to be aggressively buying everything out there. The time to be doing that is when things are on sale, okay? Things are not on sale right now. Valuations in the S&P 500 are stretched. They are. You can find pockets if you're willing to look for those pockets, okay? I just picked up General Dynamics. You guys know that. I thought that was a good bargain. McDonald's I bought. I didn't think it was a good bargain, but I bought it long. I did not think McDonald's was well priced. Kroger I thought was a phenomenal value. So I picked up some Kroger. So you can find those small pockets. But the thing about it is, if you're a value investor, are you going to go out and buy Kroger as a cornerstone in your portfolio at the expense of maybe owning a small position in the S&P 500 or starting a small position in some of these wonderful companies? Pfizer, there's a lot of companies you can pick up below $50. And that way your money can go a little bit further. AT&T, Verizon, Pfizer, Comcast, some of these good companies that are out there that you can pick up a little bit of exposure and get yourself a nice dividend. Pfizer pays a 4% dividend, so things that you can kind of think about there. But I think you make a great point. It speaks to what I talk about all the time. Am I heavy in the S&P 500? I've taken most of my passive positions down to very, very minimal positions, just so I can gauge it. All right, and I'll be putting that money back to work when I feel like it's a little bit better time, because I'm going to be putting large chunks of capital to work during those times. I'm not going to be screwing around. The time to be putting large chunks of capital to work is not right now, in my opinion. That's how I'm deploying my philosophy. I'd rather sit back in the meantime and collect my dividends. Okay, I'll raise my glass to that. Good stuff, man. I get Conrad throwing down, having a cocktail like a gentleman. I love it. Love Friday nights with Ryan. I appreciate you guys again. It's awesome. Ha ha. Heck yeah. J-Mac. J Max offering his. I wonder how many he's had thus far. So I'm on strong coffee. Laugh out loud. I think Andrew's working right now, man. That chap, he catches this from work, man. I give that guy some kudos, man. That's legit. Conrad says liquid crack. Yeah, well, it could be. No way of knocking if they cut the rates. Who knows if they don't cut? I'm not sure. Day drinking is hard. Cash is king. John Henderson, that speaks to what I'm talking about. And in all fairness, we joke about the funny stuff in the group, but I think I'm sitting at about, give you guys, just so I'm not pulling these figures out of my backside. Now, this is the invested capital, and it does fluctuate. Okay, I told you some of the reductions that I took from the portfolio that I've declared for you guys as well. Blackstone reduction, CRM Salesforce reduction to profit there. So some of those, but I will give you what I've got right now, around 60%, 63% of my money that I have earmarked for investment. Okay, 60%, 23% in cash, and 13% in fixed income, right? That's what I've got. Now that doesn't count the pension plan that is completely passive. I leave it alone. I never touch it. I true dollar cost average it. I abide by every fundamental rule in the book for my pension. I never look at it. The TSP is hard enough to log into, but this account I monitor multiple times during the day. This is my project account. This is my baby, okay? But yeah, 63% cash. So when John Henderson says cash is king, I couldn't agree more. The position right now, white meat, 50,000 of just dry powder. That's of the invested capital, remember? I've probably got another 100 sitting on the side as well, just ready to deploy when the time is right. Now, you say, wow, Ryan, what is the cash going to do you good if you're sitting on that much? And that's what a financial planner would say. Financial planner is going to say, give it all to me, man. I'll take care of you. I'll get you to $1 million in 10 years. No, you won't, idiot. I'm the type of guy they don't want to talk to. Well, about 132,000 invested. So serious money, guys. This isn't monopoly, okay? Invested in the stock market right now, even the fixed equities portfolio right now, which has just been on fire, the 13% I told you guys about, that's $27,789. So no small potatoes there in the fixed equities. But the $50,000 is kind of where I want to be with my lack of exposure, and those are going to be my bullets. And when it's time to fire away, that's exactly what I'm going to do. And I've got reserve capital, those big chunks of pay dirt that are just sitting there. Those will be deployed when the time is right. If the time never becomes right, no problem. I have no problem holding cash. Unlike a lot of other investors who think that they have to be absolutely just jam-packed into the stock market all the time, I am not one of those investors. I'm not. I'm looking to use and abuse the stock market to the allocation that I deem fit for me. That's it. There's nothing that anybody can tell me to say, man, you should just take your whole wad and dump it on the stock market right here. I don't come from money. I will not do that. I will not over subject myself to risk. And I think I'm a fairly aggressive investor with the amount of high-paying, high-quality dividend stocks that I own. Invesco has been taken out of that portfolio that I gave to you guys. So Invesco is out. But aside from that, I think all the holdings are still in there in that portfolio. You can see what type of quality I'm going after to hold in the portfolio. That's just the type of investor I want to be. But still owning single stock is somewhat aggressive, okay? All Good says 15,000. I'm not sure if that's for me. Again, I put more value in you being part of my community, to be honest with you. I'm not really sure what that means. I think it would be kind of cool. The folks that are closest to me are proud of the project. They know how much influence I can have on people. And, so be it. I will just make sure and curtail the message to make sure that some of the responsibility, if not all of it, is on you guys to leverage the door that I open for you, and you be the one to walk through the door. Okay? All right. Still speaking the truth. And that's what we're trying to do, investing wisely. And like I said at the top of the show, you're going to deliver it different. And I know you do, and it's good. Sometimes people, I tune in, I watch Joe. I haven't watched Joe for the last week or so anyway, but man alive, that guy has the radio voice, man. If you don't think so, kick over. It's really amazing. You can sit there for 30 minutes and watch his videos. That's why he's so freaking popular, because he's got such a good delivery. It's awesome. But that's about the best compliment I can give him. The information is phenomenal, but he does a great job of delivering the information as well. No doubt. Kudos to my sponsored channel, Mr. Joe. I think Canine turned me on to that channel. Really glad to be turned on to that, because that's one of the very few, if not the only, YouTube channel. And Ryan Scribner doing great things too. But I don't go out of my way to watch Ryan's content. I would go out of my way to watch the Ryan Scribner Independent Investor Channel collaboration video. I just watched that this weekend just for fun. It's pretty good. It's pretty good. That's in my playlist on the Independent Investor Channel. If you haven't seen it, kick over. There's a couple good collaborations on there that we did. One in particular on dividend picks. It's worth the watch for sure. All right. J Mac laugh out loud. Should I buy all of the Kronos Group shares before it explodes? This is something that I know there's a lot of good information out there on it. One of my featured channels, I know Nate O'Brien, who is a channel creator that I have the utmost respect for, no doubt about it, has got some content on the topic, but I typically I won't speak about it on the Independent Investor Channel for reasons that I reserve the right not to. Furthermore, there's enough content out there. Look, guys, a lot of aggressive investors out there are putting their stamp on this. If it works out for you and you make money, great. Don't quit your day job, okay? Don't think that you're going to become Gordon Gekko and live in a high rise off of these types of stock moves in the stock market. Eventually, you will learn that style of investing, if it's curtailed in the correct manner, can be considered an investment. But I find that a lot of folks that are looking to get exposure in that manner are not investing. They're not. All right? I'm trying to be nice. I think it's very exciting. I think it's a very exciting industry. I personally do not, and again, for personal reasons, I will not, I won't, I can't, and I won't. And I typically keep the discussion to a very, very dull roar on the Independent Investor Channel, and that is for very, very good reason. And I would encourage you to seek out the landscape. I know one of the featured channels that I don't talk about very often, that's not a featured channel on the Independent Investor Channel, but is Jeff Worth Investing, and I like Jeff a lot. Jeff covers a lot of topics like that. So if that's a genre of investing that you're interested in, kick over and check out Jeff's channel. I know he'd appreciate it. He's a good guy. I watched him grow from 1 subscriber up to a pretty cool following. I don't know where he's at right now, but I wish guys like that all the best for sure. But that's the angle that he kind of plays when pushing content out. Conversely, it's an angle that I do not play. All right. So sorry about that. Stephen T, thoughts on buying VPU at these levels? I just sold it. I sold VPU within the Roth because I own it in the Spider portfolio. All right. So I took some very good profit. I was up 10% on a fairly large amount. Again, owning the passive sectors, owning the passive markets broader right now, I would really encourage everybody to look at the prospect of using scale if you're going to buy the market in its entirety right now, okay? Buying the broader market right now, 12 years into a bull market, you may be setting yourself up for a downturn. And I'm not saying that that's not an okay idea if you have a long-term perspective and have the ability to potentially double up that position or even triple up that position when prices kind of come down and you get a little bit more favorable entry point, okay? So not timing the market, but strategically entering the market is my response to that. I would say no to VPU right here unless you need a couple percentage points of exposure to the utility sector, right? Then it can make sense. And depending on the positioning within that portfolio, I think VPU is the premier exposure to the utility sector. If you don't want to piecemeal it out a little bit and pick up NextEra or Southern Company or Duke Energy or the other one, please, Dominion, okay, which are the top 4 holdings in that ETF. If you don't want to do that, then VPU is a great exposure tool because I think it pays a 3% dividend to own that. But recommended sector allocation in any portfolio, I'm not sure if I'm in the camp of just putting all of your eggs into the utility sector. As a matter of fact, it's toward the bottom tier of my portfolio, and it fits into materials at 3%, VPU at 3%. I just think there's so much more intriguing sectors out there like technology, healthcare, financials right now on the recess, out of favor, energy, recessed and out of favor, discretionary, staples, real estate, not so much here at these levels as well, kind of put it in the same camp. But you could justify having even more exposure to real estate than utilities, in my opinion, right? I think you can win with any of them, but that's my perspective. It's a really good question. Thank you for asking me my thoughts on that. Euro is supposed to cut rates. They didn't. Interesting enough. With low interest rates, keeping an eye on the corporate debt loads. This is insane. Very smart. Greg always reaches into the archives and puts something on there of a very serious nature. It's my number one concern. I just think the level of debt right now that's being carried, pushing the debt ceiling out 2 years is just so stupid. I was in DC this week and I thought, man, I'm a pilgrim in an unholy land right now. Unbelievable how many thinking heads can be there and justify being so stupid. It's going to be interesting to see what happens when this economy turns south and we're still having to answer to these debt loads. Right now, cash is very affordable. Money, liquidity is very, very affordable. People are buying liquidity because it is so cheap. And it's my number one concern. I would love Ernest to try to give his twist on that, what he thinks about that, because is my concern off base? I don't believe so. I probably can't articulate it the way that Ernest probably can. And I would love to hear his input. And that, again, that'll end up in the Facebook group if he takes that for action and has a little bit more insight on that topic. But there's no excuse. It's gotten freaking out of control. It's insane. Okay, it's insane. And these other countries that are buying up these debt, China specifically, I mean, they might as well just own the United States, for crying out loud. Yeah, it's scary stuff, man. And good on them for doing it. We're allowing them to do it. So, Ryan, I'm new to federal employee. Do you recommend that I allocate 100% of my TSP in the C fund? I don't do 100%. I'll tell you what my allocation is. And again, I'm not a financial advisor, so I don't put advice out there. What I'll do is I'll offer an option through a testimonial. I'll tell you what I do. I do a 70-20-10. Okay, CS&I 70-20-10. That's what I do. You're not wrong by putting 100%. Depending on how passive you want to be with your opportunity in the TSP, I've taken a rejuvenated look at the life cycle funds. And I think, for as much as I don't advocate for a managed portfolio, for a government employee that has access to the TSP and the access to the management that BlackRock puts on that life cycle fund, depending on how old you are and depending on the amount of attention that you want to put on your personal portfolio, I don't know if I would necessarily write off the life cycle fund within the TSP. The expense is extremely low, 34 cents for every $1,000 that you invest in that. So not one of those options that you want to just blow off. Look into it. Look at the 2030, look at the 2040. I think they're coming out with in November the 2050 or 2050 or 2060. I'd have to check, but they're rolling out a new fund that starts exclusively stock. So it's 97% or 99% stock, and then starts to scale back as you get older. That's the way that life cycle works. And you can actually log into the tsp.gov and you can actually watch it over time adjust. So when you get to your target retirement date, you can actually see where that's reduced its stock exposure and adjusted to the fixed income exposure within that portfolio. But I've got a little money in the G fund right now. The G fund, I thank Ernest, who's right above you, who just says hello, but I don't want to embarrass him. He's smarter than me. He blows me out of the water. Okay. Very smart guy. Okay. Did a deep dive on the the G fund, because he saw that I had some Vanguard short-term ETFs and was like, why are you doing that? The C fund, the G fund is actually a safer account that pays closer to 3%, pays more of like a money market account, and is actually safer and pays a higher yield. So I wouldn't just discredit the G fund either. All the funds are really good. The TSP is meant to avoid overlap for you. So if you do end up going with a life cycle fund, it's, for lack of better terms, a perfect portfolio built for you that's passive in nature. It harvests, it balances on its own, and it's professionally managed. They're doing the tax loss harvesting and the balancing within the portfolio at BlackRock every quarter. So hopefully that helps you. If you're hell bent on just doing the passive index funds within there, I do 70-20-10. That's what I do. Okay. I can't tell you what to do, but hopefully that gives you some insight on kind of how I contribute to the TSP. That's what I do. Okay. Thanks, Mike. Appreciate the question. Good stuff. Ryan, I have a Yeti. I have a Yeti too. I use it every single day, that I would like to send over your way. The cooler's like $500, man. Thank you. That's great. Hit me up via email. I'll send you my address. I'd like a Yeti that's engraved with an anchor. That's a little hint for anybody that wants a little bit of I'll probably get it made myself, but I think they're doing some cool engraving now with Yeti. Yeti's awesome. I have one. It's a phenomenal product. Best $40 I've ever spent for a coffee cup. Keeps my coffee piping hot all the way through the afternoon. It's amazing. It's really good stuff. Market might be up to new highs, but it's up to the feds to keep it that way. Yeah, I hate to admit that you're right, for sure. I'm starting to get to the bottom of the live stream. We've been going an hour and 43 minutes, certainly for the devout core of the group here. Thank you for coming in and staying with me. I know some folks like to trickle in and they trickle out of the live stream. We're logging about 1.1 thousand subscribers, the one last week got. So for the folks that catch it after the fact, again, a product that I'm proud to put out there on the Independent Investor channel. Hopefully you guys find some value in it. Things that I say it in a different way. Hopefully you pick up a little dab of motivation to make this stuff fit for you. All right. And Michael Hayes is in the group here, hits me up with a question: beginning investor, middle life. I don't think so. The win invest. I didn't really get to my rhetorical lesson here. I may just make a YouTube video on it. I always just put this as a guideline just in case I get stuck and have writer's block 1 hour into my live stream and I just sit here like flatlining and I don't know what to say. It's never happened yet, but I like to have something to fall back on. But I don't think it's too late to invest ever, especially if you're coming across this unique of message to where you can streamline and really accelerate your dollar's potential going forward, I just think a lot of people gravitate to the prospect of that. Now, if we were in a little bit more opportune market for buying, I just think a lot of people would disagree with me and say, Ryan, what are you talking about? The stock market goes up every day. Yeah, it does. Now is not the time I want to be buying. Sorry. You're going to hear a different perspective from me when the market is down and everybody is pulling out their doomsday prepper kits. Okay? You're going to hear a different perspective from me. I'm going to be strategically buying up stock, and I'm going to be doing it without emotion. I'm going to be strategically buying up stock. And now is not the time that I'm doing that. But if you're looking to accumulate a position, Michael, in the stock market right now, I encourage you to do so. And I encourage you to look at it from this perspective. The very account that you own is your ticket to success. Okay. Now, anybody can take the right account and put a bunch of garbage within that bucket. What I mean by that is you can start the beautiful account and people will come in and say, man, this guy on Independent Investor Channel, he's legit. He's talking about a self-directed account. This is badass. I'm going to start this account. And I'm going to buy Tesla and I'm going to retire in 10 years. All right. That is an extremely deficient way of misusing the information that I'm putting out there with regard to the importance of the bucket. The bucket has to go hand in hand with really, really good investments. And it may be either on the stock side of the house or it may be with the passive side of the house. And I mentioned Vanguard. It's the exclusive product offerer that I talk about because I just don't think, I think collectively across the landscape, people are very, very consistently happy with Vanguard. I personally am a happy product owner of Vanguard products from a passive perspective. Okay. Now, if you own Apple, you're going to own the same Apple company as me. Okay. So whatever you choose to do, hear me out on the importance of the account itself. So if you're midlife, 40, 50, whatever age you are, look at it from that perspective. What type of investor do you want to be? And put those good quality assets within that good bucket. And that's the very best chance that you can give yourself. What are your alternatives? Is your alternative to just throw a dart at a dartboard and end up falling into an Edward Jones or a Wells Fargo? Guys, I've got people who come into the channel and they're like, I will never go there again. Never. My financial planner got mad at me when I wanted to leave. Real talk. All right. That's not their money. It's yours. And people give away the farm every single day, thousands and thousands, 10,000 times over. And for the few people that make it into this message, I applaud you for it. I will not apologize. You should really feel like you found the needle in a haystack because that's the way I felt when I was introduced to this opportunity. It's that big. It's big. Do the compounding calculator. Look at some of the videos that I do where I compare the cost within investing accounts. It's a real eye-opener. It's a real eye-opener, and it's the best validation that you can have to justify self-directed investing on your own. Okay? Really good stuff. Great to have you, Michael. Thanks for coming in, popping into the group. What's your guys' and gals' thoughts on Proctor? I took a new position in Proctor actually this week. I like it. I think it's good. It is a little bit high right now. I'm totally fine. I went after the dividend and the safety. That was a safety play and a dividend play for a potential downturn in a stock market. Okay. Relatively small position, nothing too crazy. But I did end up taking a position in Proctor in the other account, okay? And I'll be chronicling portfolio number 2 for you guys as well, doing the same thing. This is just half of the portfolio that I own. This is mine, okay? There's another equally as impressive portfolio with none of these picks, okay? All different picks in the other portfolio, about the same amount, 30 to 35 picks in that portfolio as well. Okay, I'll be rolling that out. I have no problem doing that. It's not a problem. Have a piece of pie on me. All right. Good stuff. I stated month or so again. I expect more tariffs. I could be right. Interesting. I'm kind of getting to the bottom here. The bottom of the tariffs are not helping. Some earnings reports are reflecting that. You could be right about that. Definitely sending tremors through the market. Good stuff, Andrew. I agree. Tariffs are bad. Let's summon it up. Thanks, Conrad. Appreciate. And cut to the chase. I got the police outside. No big deal. All right. Finance and finally are really looking good. I want a piece of the pie. Good stuff. Please help us update your pie. Please keep us updated on your pie. I will do that. I do. I hate to put that information out, but the thing about it is when I want to make a move in my portfolio, I do it. I don't do it thinking that, oh my gosh, my community is going to hate me because I declare a 2-day-old portfolio or a 1-day-old portfolio. But I will update those. I really will. I want you guys to have transparency on why I do what I do. And that's the explanation that I just tried to give, right? That's housed in a self-directed account. That's the product side of the house, which is typically where I don't put a lot of the focus on the channel. It's typically getting people to understand the relationship between those two when they come together. Very powerful. All right. And I like being the one that benefits from my account. I'm just crazy that way. You know what I mean? I'm crazy because I want to get paid for the risk that I'm taking in the stock market. That's seemingly a very, very rare opinion because everybody else seemingly wants to give away the farm. So Caterpillar's a great pick. A cat told me to buy Pets and Cat. Excuse me. Awesome. Anyway, into the end, Starbucks had a great week. Yeah, some earnings came and they just blew it out. Starbucks is one I really missed the boat on. Kind of disappointing to me, but not the end of the world anyway. YouTube's going to throw a bunch of comments here at the bottom, guys. But I am going to wrap it up. I see some guys leaving the live stream tonight, and I appreciate that. And I think in all fairness to the folks that catch the live stream later on, let's try to keep it under 2 hours. I do want to thank you guys immensely for making your way in. I don't want to water down the quality of the live stream. I think 2 hours is just about right. So we're going to continue the live stream next Friday. Certainly look for some uploads this week. I've got a few titles that I do want to push out through the normal channel for the folks with zero attention span and want to sit there for 5 minutes and get every answer with regard to the investing landscape. But again, guys, listen, loyalty is what I'm all about. I appreciate you coming in on your time, man. This is your time. I don't mind giving my time, but it's reciprocated. It really is. It's a two-way road. And I think we're coming stronger together for sure. The analogy that I gave about all those account holders out there that hold some real wealth, stacks of high society, we're trying to paint and define a road for you. And the more defined that road is, the easier it's going to be for you to walk it. And the more comfortable you're going to feel walking that road, as scary as it may be at the beginning, give it a chance, okay? Do whatever you got to do to validate. If you really get hung up, don't hesitate to come into the live stream. Hit me up personally. That's fine. I have a harder time responding personally now with the number of inquiries that I do get. I do apologize for that, but I do provide this opportunity for you to come in and drop your comments in, man. Like my good friend Joe. It's the first I've seen Joe's icon pop in here, man. I appreciate you guys. We will catch you next week. Thank you so much for joining the live stream, guys. Have a great, great weekend. I will see you next week. Thank you.